And it's my pleasure to introduce our moderator for this evening. We're thrilled to welcome Tim Phillips. As a journalist, Tim has written about business, technology, economics, and innovation for more than 100 publishers around the world, including the Wall Street Journal Europe, the International Herald Tribune, the Times and Sunday Times, the Observer, the Telegraph, and the Independent, among others. And Tim also hosts the weekly Vox Talks Economics podcast for the Center for Economic Policy Research. And so with my thanks to everyone for joining us for this evening for this event, Tim, I'm pleased to hand it over to you to introduce the panel and kick off the session.
Well, thank you very much, Elizabeth, and welcome everybody. In the next hour, I'm sure we're going to have a pretty good discussion. There's some strong opinions going around, so keep listening, don't miss anything. Now, we know advances in AI are going to fundamentally reshape jobs and industries and even economies as well, but just how significant will those changes be for the economies of Europe, the Middle East, and Africa? And how do you actually figure out what impact AI is having? Now, I've got some research here from Goldman Sachs. Says 2/3 of jobs in Europe and the US are exposed to some degree of AI automation, and a quarter of all work could be completely replaced by AI. So how should policymakers, companies, and workers in EMEA countries respond? Our panel is going to be discussing the impact of AI on the economy and on the firms and workers in it. So who are they? Well, first of all, we have a veteran of the Economic Outlook series. So that is Professor Randy Kroszner, the Norman R. Bobbins Professor of Economics at Chicago Booth. Randy previously served as the Deputy Dean for Executive Programs at Booth. He was a governor of the Federal Reserve System from 2006 to 2009. And currently he is serving as chair of the Financial Research Advisory Committee for the US Treasury's Office of Financial Research. He's also a member of the Bank of England's Financial Policy Committee. So welcome, Randy. What's going to happen to interest rates in the UK?
I don't talk about that.
He's only kidding. I don't expect you to. You're very welcome. Now, also, we have Julia Lane, a professor at the NYU Wagner Graduate School of Public Service and an NYU Provostial Fellow for Innovation Analytics. She co-founded the Coleridge Initiative, which aims to transform the way governments access and use data for the social good. And Julia previously served on the Advisory Committee on Data for Evidence Building and the National AI Research Resources Task Force. Julia, welcome as well.
Glad to be here.
Thank you. And finally, Chad Syverson, the George C. Chow Distinguished Service Professor of Economics and a Research Associate of the National Bureau of Economic Research. And Chad is also co-author of the intermediate level textbook Microeconomics, and his research on the interactions of firm structure, market structure, and productivity have been published in several top journals and has earned multiple National Science Foundation awards. Chad, hello as well.
Thank you, Tim. It's good to be here.
Now, we do have the Q&A open tonight, so you will be able to submit questions. I would warn you that quite a few of you have submitted questions when you registered as well. So we do have a packed agenda. I will do my best to reflect all the questions that are coming in, but I can't commit to asking all the questions that you ask. As I say, we will do our best to answer all your queries, though. First of all, I'd like to ask each of you on the panel a sort of introductory question. Julia, can I come to you first? I quoted some statistics at the beginning, but when we discuss AI, it sort of represents a bag of all sorts of different technologies at the moment. Do we really know what we mean by AI at the moment? And can we easily capture and measure and estimate its impact?
So I'll use slightly less colorful language than I used in the opening, but I think the polite term is those numbers are, I think one might call them bollocks. Is that the correct pronunciation?
I think it probably is.
Yeah, well, from an Antipodean point of view, at least. So the reason that I think they are, in a more academic term, not robust, is when I served on the National AI Research Resources Task Force, and you can go and look at the report, we were being charged by the President and Congress. There were 11 computer science types, and then there was me, the token social scientist. And we were asked to figure out how much the US government should invest in research resources to stimulate AI for workforce, innovation, diversity, and so on. And, you know, everyone's saying, well, we're going to spend lots of money, which is typically what the task force does. And I said, well, wait a minute. Do we know how much is currently going on in AI? How many people are involved in the workforce? And if we're going to say we're going to double resources in X, where are we starting and how are we going to know when we get there? So that's a perfectly reasonable thing to do, right? So the Office of Science and Technology staff who were policy staff who were really good, went off and tried to figure out what numbers they could come up with that would be reasonably robust. So if you go onto the Research Resources Task Force, we say there have been 2,000 computer science faculty members who have published at least one AI-related paper. There are the share of new computer science PhD recipients spending in AI increased from 19 to 25% between 2019 and 2020 for a total of 442. So I was, of course, curious to see then, where did those numbers come from?
Mm-hmm.
Because those are also some of the numbers that feed in to the Stanford AI Index and into the OECD Index. So here's, when you go and take a look at the Stanford AI Index, and I've talked to Eric Brynjolfsson and others about this, and we're hosting a workshop that recognizes that these numbers are problematic. Here's the way in which they come up with them. They go and they take a look at full text publications published on an open science website called Archive,
Mm-hmm.
which people put preprints on, and they tag the papers with whether they're AI or not. So it's self-identified. They estimate a model using the terms used in those papers, which can go back a number of years. So obviously archaic, like ChatGPT, doesn't show up till later. And if you take a look at the list of terms, they are also not robust. We're going to use that as code for bollocks going forward, okay? So then what they do is they take those terms, the model that they've estimated, they apply them to titles and abstracts from publication data sets like Web of Science and Dimensions, and that's where they get the numbers from. So these claims that are being made are then made from feelings or interviews with business managers, which kind of feed on each other. There's no hard numbers other than what we described before. There have been some efforts made by Rob Siemens and Eric, where they've asked firms a question about whether they use AI, and then they've made an assumption about the workforce impact, but that's about the long and the short of it. So there's a lot that needs to be done. We've done some work in that area. I'm happy to fill you in later, but that's kind of my jaundiced view of the value of those estimates.
Okay, so if the big estimates that we're making, those big aggregate estimates are, what were you saying? Maybe not robust. Not
Yes.
robust, yeah. Chad, I come to you. You do research on productivity, and we've all been searching for productivity for a decade and a half now. Is there evidence that this AI might begin to solve the productivity problem?
Well, I hope it will. As to the evidence, Julia raises, I think, some very fair concerns about direct measurement of AI. Things I've done along with Eric Brynjolfsson, who Julia mentioned, and Daniel Rock, say the problem's even bigger than that. A lot of the problem in productivity measurement isn't even about the AI investments themselves. It's about the investments in intangibles that go along with it. And we can talk more about that later. But modulo those very real measurement concerns, I think there is a data-driven case to be made that maybe we're starting to see an emergence from the productivity growth slowdown that's been going on for 15 plus years that you mentioned. I think it's worth just quickly setting a context for everyone here that the world has been in a productivity growth slowdown for those 15 plus years now. Almost every economy, regardless of income level or geographic location, has seen a productivity growth slowdown. And that's important because productivity growth is the speed limit on economic growth. And we can't get sustained growth in material living standards without productivity growth. So if that falls, so does economic growth. And to be honest, I don't think we really know exactly why productivity growth slowed down 15 or so years ago, but we've all been looking for signs of an emergence from that slowdown. And I think, like I said, there is some data-driven case to be made that might be happening, but we're far. I think I might be on the more optimistic end of things, and I still would admit we're far from knowing that the productivity growth slowdown is over. So I think that's a really important context for the discussion we're having here today.
And Randy, we have a lot of excitement, certainly, about AI and whether or not that is justified or whether that's hype. Is it too early to be able to think about macroeconomic impacts of AI, for example, increased demand for investment?
Sure, I think it's a very important issue that I think hasn't got as much attention as it deserves. We certainly don't know exactly what Julia and Chad have said. We're not sure about how big a deal this is going to be or how transformative it's going to be. But what we can do is run out a scenario that if it is, if you are optimistic and it is going to be a big deal. I mean, certainly we've seen a lot of excitement in the stock market over a number of companies that have been either producing or using AI technologies, and that suggests that there might be a lot of investment that would be going into this area, not only by the chip makers, but also by the people that would be buying the chips and programmers, et cetera, that could affect many, many industries. So in some sense, you may recall that a few years ago, there was a lot of discussion of so-called secular stagnation, that was sort of a way of talking about the productivity slowdown that Chad was mentioning, that we've kind of run out of ideas. We're kind of, people are not very excited about investment. Investment is not having very high payoffs. And so we just kind of, barely kind of chug along. Obviously, this is just the opposite of that. Now, under the secular stagnation hypothesis, well, you'd see interest rates sort of move down because demand for investment's not very high. Because ultimately, you think of kind of the global benchmark interest rate as being defined by supply and demand. No surprise from a University of Chicago economist, you're going to hear about supply and demand. And so if there's a fall off in the demand for investment, all other things being equal, where supply and demand are going to meet, be at a lower price, that is at a lower interest rate. But if you've got a lot of excitement about investment in AI and either in kind of the fundamentals of creating and training those models or in using them, that could lead to a substantial increase in investment over the next few years. And all other things being equal, that will lead to interest rates moving up. And this is a very big debate right now about, well, after central banks start to normalize interest rates, after inflation comes down, where will normalization be? Will it go back to where things were over the last decade or so at very, very low levels? Will it go back to what it was prior to the global financial crisis? in this scenario, it means that it'll go back something to closer that's the long run level will be closer to what it was before the financial crisis rather than the very low levels that we've seen recently. And then obviously that has an impact in thinking about what's the valuation of startups who might be coming into the AI space, et cetera, et cetera. So it's, I think, a very important and interesting topic to think about. We don't know the answers yet, but it's important to work out these scenarios, particularly if you're thinking about investment in this area. You've got to think about what the benchmark interest rate is going to be over the next decade.
Thank you very much. Now we're going to be looking at the impacts, as I mentioned in the introduction, on workers and firms and on the economy. So if we start with workers, first of all, there is a live debate at the moment that's going on about the impact of AI at that micro level in the workplace, and whether it is going to replace tasks, augment workers, or whether it will replace jobs entirely. Chad, what do you think about that? What's the research that you're doing telling you?
So it's early, but I think the kind of case studies that have been done so far, where we really best think we can measure things, seems to indicate it's going to be more task-based than job-based, and therefore push to complementary rather than substitutable applications. And that it tends to actually help workers, I guess economists would say lower skilled workers, but at the lower end of the wage scale within an occupation. So if anything, and this is part of the big debate that you're talking about, is this IT 2.0 where we're going to see even more skill bias technological change and even further increases in inequality, or might we see an actual compression in the earnings distribution? It's very early. We only have a few good case studies, but I think those so far seem to indicate it's the latter, that AI technologies, at least in the applications they've been used in, seem to help the workers at the lower end of the skill distribution, and therefore bring up productivity most among those workers relative to higher skilled workers. Time will tell. We need a lot more work, obviously, and we've hardly seen the entire scope of potential applications of AI. So it's very early, but I think the early returns are at least suggestive along that dimension as I read them.
Julia, what do you think? Because we have a question come in to say, how would you even begin to measure the productivity effects of something like generative AI?
Well, obviously, I've been thinking about that quite a lot since having been on that task force. And I don't think it's going to come as any surprise to Chad and to Randy that I've gone back to thinking about what are the underlying micro data that you can work with which you can work. So here's the way in which we are doing it. The basic idea here is, in some sense, the challenge is that AI is neither an industry nor a scientific field. So we don't have a statistical infrastructure that deals with it. What happened was 100 years ago, we had SIC codes, which captured manufacturing and agriculture because that was what we did.
Mm-hmm.
And we clustered firms in those by that grouping. And then about 40 years ago, we started to say, oh, well, it's a service economy. We need to describe how firms produce services. And so we clustered firms by how goods were produced, how things were produced, which is the service economy and NAICS code. So financial services, health services, and so on. But the problem we have now is that we're not really producing physical goods or services as much. We're producing ideas.
Mm-hmm.
It's very much in line with what Paul Romer highlighted, endogenous technological change. So the way in which growth is occurring is not so much investing in capital, labor, energy, material services, CLEMS, as the way in which they're being put together. And I love Heidi Williams's quote that what innovation does is it breaks the shackles of scarcity. So what you're doing is you're combining things. So how is that happening? Well, we've got this massive industrial policy in which science agencies and other agencies have been asked to invest in ideas. That's people. And it's largely been at universities. So the AI winter, changed to in NSF in particular, but other agencies like DOE, and I'm using American examples, apologies, but we're in the United States. So they invested substantially in AI research. And there was a 100-year report, which Eric co-authored as well, which was AI research is what AI researchers do. So when I was on the NAIR task force, I was going, how are we going to measure this? Fei Li said, who developed ImageNet and who helped pull us out of the AI winter, she said, well, the way in which you're going to find AI research is just go to the conferences, and the base AI researchers are the ones who go to those conferences. That's how they communicate. That's how they transmit ideas, because it's the creation, transmission, and adoption of ideas that we're talking about. So that gives you your seed. If you think ideas are embodied in people, then you need to trace people. So what you can do is you can see who's doing AI work at the universities. You can track them through the research grants, not just them, but the graduate students, postdocs, undergraduates, and so on, who, by the way, we know have value not by ad hoc assertions, but we're seeing them flow into the labor market, getting paid $750,000 a year plus stock options. So the firms are valuing those ideas. So we created something about 15 years ago called Star Metrics, which is now U-Metrics, which captures the HR and finance information that is spent on the grants at those universities, all the people, not just the principal investigators. And then you can track them into the wage records of the firms in the private sector. So you can see what their earnings are, how many of them are being clustered, how many businesses they're starting up. You can then identify the AI-touched firms or the EV or any of the other critical and emerging technologies like quantum computing or synthetic biology. So it's technology agnostic approach that says, okay, what we're really looking at is not just manufacturing industries or service industries, but what we're calling the industry of ideas. That's how you capture what's going on and what happens to the other workers in those firms and what skill needs there are, because you can link the administrative records in.
Yeah. Thank you, Randy. I want to ask you about the impact of this industry of ideas on the workers within the firms. There are several conceptions of how this is going to play out. We have some research, a paper out from David O'Toole, who's speculating that AI may rebuild middle-class jobs, is how he describes it. Daron Acemoglu notably believes that the direction of innovation driven by big tech in AI might not be worker favorable. What do you have an opinion on who winners and losers may be?
Well, exactly as my colleagues have said, it's a little bit early to speak definitively about that. But one thing one might do is go back to history, because we've had big revolutions before. In the teens and 20s was an enormous revolution in terms of electrification of plants, the development of small machines. The way plants used to work was that there was kind of one big power source. It was like a conveyor belt that kind of ran everything through the plant. And it was either the plant was working or not working if something went wrong with that conveyor belt. But then, of course, with the modern technologies that came in to be used in like auto manufacturers, you still had a production line, but people were using individual machines in that production line, and electrification allowed for plug-in machines for that. So there was a lot of debate in that period about what would happen to jobs. And the concern initially was that, well, it would be the lower skilled jobs that would be eliminated by these machines. But obviously that hasn't been the case. And so I think you could make a more optimistic case that this is not going to be eliminating those sorts of jobs. Exactly as Chad said, it could be complementary to many types of jobs and tasks, simply making people more productive or asking people to do things that are slightly different than what they were doing, but not necessarily requiring them to have a PhD in order to be able to do it. And certainly we've seen these technological revolutions before not end in, with no jobs, but, with lots of jobs in the post-war US period. So I'm reasonably optimistic that this can be used in a way that will be jobs complementary and increase productivity. I mean, for the optimists, it may be that, well, people, we've talked about, well, in the early part of the 20th century, most countries had a 6-day work week. Then we moved to a 5-day work week. We're sort of seem to be on the verge of a 4-day work week. But if you're super optimistic, maybe it'll be down to 3. But it still seems that, at least for the foreseeable future, there's still going to be a lot of stuff that people will have to do.
Chad, one way in which work has definitely changed over the past decade has been the rise of gig work, non-traditional work structures. How do you see AI impacting that?
That's a good question. We have seen how just, communications technologies change where work has taken place, and sort of the flexibility of location of workers, and that's tied in part to the gig economy. It's also a separate phenomenon. I'm not sure how AI is going to either, accelerate that further or reverse some of the changes we've seen over the past years. I'm a little bit, speaking, we're all Chicago people here. I'm a real Kroszner on this. And Ronald Coase had this idea. Basically, he said the idea that as applied to this case is, okay, who wins from remote work, for example? Is it the workers get to stay at home because they don't want to commute anymore, even if there's a cost to the companies, maybe in productivity? And I know that's up to debate, but let's just suppose there is. Or can the companies actually force the workers to come in for this, that, or the other reason? And my view, the sort of Kroszner view, is, look, wages will adjust to make whatever the most efficient thing is happen. So if it's really efficient and the productivity gains to a company are from having the workers all together in an office, they're going to have to compensate the workers to come in and commute now in a way they didn't before, because that was the only way you could do it before. But now with work at home, that's an option. But if companies find that too costly, they will pay the workers. They'll compensate them for the commute. If the productivity gains aren't that large, certainly relative to the cost of commuting for workers, then the workers will be able to stay at home. They're not going to get compensated for it in terms of wages, but they'll get compensated for it in terms of not having to commute and having more flexible schedules, perhaps. I sort of think whatever way the technology pushes us, whether it's more or less work from home, more or less gig work, we've got this price out there that we call the wage that can move around to compensate the parties in a way that the parties can share amongst themselves to let the most productive thing happen. Now, that can take time, and there's plenty of frictions that slow that process down. But I sort of, in the long run, that's kind of how I think about your question.
Absolutely. Before we move on to talk about firms and economies in general, then we do have a question, and something that we haven't discussed at all. There has been one test of workers' rights, one large test of workers' rights in the face of AI, and of course that's the Screen Actors Guild strike, and that led to a resolution of sorts. Does anyone have an opinion? Anyone on our panel have an opinion about that and what that tells us about the future path, the adoption of AI?
I'm not going to say I'm much of an expert in the particular technologies at hand, but I think that's an example of the kind of Kroszner bargaining I was just talking about. You have the producers and studios on one side, You have the actors, the writers on the other. There's this new technology that's going to influence how output in that industry is made. Each party is trying to figure out what the contribution of each is vis-a-vis the technology. And they came to an agreement. It wasn't completely frictionless, that agreement. There was a strike, but they came to an agreement to share those gains in a particular way, at least for the time, for the next several years to come. And that's kind of the process I have in mind when I was talking about that Kroszner bargaining. We'll see whether it holds stable and whether the technology has the effects that all the parties thought. But that's kind of what I would expect more of as we see this diffusion of the technology into other areas.
Thanks, Chad, and thanks for the question as well. Let's move on to talking about firms. Julia, in this new economy where different skills are going to be demanded, are firms going to have to look for a new type of worker?
So that's a great question. I think, again, I'm a data guy, right? So I think we're going to be seeing a different style of education, and we're going to be able to observe that in the data. So we've always thought about education, the K through 20 education system is providing the skills for particular workers. But one of the things we're expecting to see in the data that we're working with, which is linking these records up together with education records, is the increased importance of different types of certification.
Mm-hmm.
So you're going to have we've always needed a flexible labor market. Now it's much easier to acquire the different types of skills. So capturing certifications that are going to make sense to firms is going to be a really important activity. So credential engineer estimates there are about 1 million different credentials in the US. So talking about signaling, Chad, the firms are being overwhelmed by the certifications, and they don't know what the signals are telling them. So I think there'll be a lot more interest in understanding what are high quality signals, what are low quality signals, and what skills can workers acquire, and how do firms understand how to hire the workers with the requisite skills.
Randy, Julia mentioned flexible labor markets. We are dealing specifically with Europe, Middle East, and Africa today. Sometimes the labor markets in some of those countries are criticized for being too rigid, too little flexibility. How do you think that the impact of AI, if it demands flexible labor markets, will play out in these countries compared to the US experience, perhaps?
I think that's a very important point, and I think that has been one of the points about U.S. labor market versus other labor markets is the flexibility to deal with change. And one of the key things will be there tends to be much higher unionization in Europe, Middle East, Africa relative to the U.S. So the unions will have to make sure that they take this into account. Exactly as Chad had said, there are a lot of frictions in the strike and leading to a strike that happened in the U.S. with the screenwriters. And I think because of the potential for large change and the uncertainty around it, there may be more friction that is associated with that. So you may see some labor market disruptions because of that. But it's going to be very important to take this into account. We can't live in the past. Countries that try to just keep everything exactly the same as it was and try to preserve all jobs, all tasks, because sometimes labor contracts focus on particular tasks. Actually, the unions in Europe, Middle East, Africa tend to be a little less focused on that than in the US. But to the extent that they are, that's problematic because the tasks are definitely going to be changing. And so in thinking about the labor market consequences, it is very important to think about the labor market institutions, the structure of the unions, the flexibility that's there. And so I think one of the key things that this will drive is greater flexibility in those markets, because I think people who try to just do things as they were in 2000, when we're in 2025 or 2020, 2030, it's going to be not good for the workers, not good for the economy. Just trying to preserve that from the past.
I'll stay with you for the moment, Randy. What, because we are discussing Africa as well here, a country that technologically starts at a disadvantage. Do you see globally this playing out as AI giving a growth advantage to more advanced economies? How do you think countries within Africa will be able to make the best use of AI to generate growth?
So it's interesting because it depends how you think about the starting point. So for example, if you looked 20 years ago, you would say that, well, telecommunications was much less developed in Africa than in other countries. It was very difficult for people to get a landline. But in some sense, precisely because of that constraint, there was much more rapid development of cellular technology and mobile phones. And then mobile phone banking became much more widespread, and is much more widespread in Africa than it is in other countries. So sometimes what might seem to be a negative can be turned into a positive when you have the basics. So you obviously will need the internet connections. You will need the mobile technology, but that's there in Africa. And so in certain ways, it may be that Africa will be poised to be able to take advantage of some of these things, because you don't have the same rigidities that you have in some of the other countries. So I guess my plea would be to make sure that African countries don't put some of those.
I think we've lost Randy for the second. There, let's just wait to see if he comes back. I don't think so. We'll try and unfreeze him. Chad, I wanted to ask you a question that one of the questions, the pre-submitted questions that came in,
Sure.
asking about potential black swan events in particular industries that will be associated with the impact of AI. Do you foresee these sorts of radical changes in particular industries?
I think, you know, any technology that's a general purpose technology, in other words, has such huge scope of potential application that's basically used everywhere. And I think AI is one of those. It's going to have really different effects, and some of those will be radical. There's going to be certain markets where, and probably in an unforeseen way, because the more you foresee something, the more you pre-respond to it, and therefore the less actually radical on the ground effect it tends to have. So these I think that the things that surprise us most are the ones that end up being the most radical. I guess that's the black swan idea. So yeah, I bet that will happen. Now, I can't tell you which industry it's going to be, but I think it will happen. You know, I was just thinking this morning about rewinding the clock about 30 years, where IT1 did actually really affect an industry, and it was travel agency. And the way travel agents used to make their money was over half of the revenue in the industry was on airline ticket commissions. Okay? You buy an airline ticket, it's usually from a travel agent. There'd be a $50 commission on there in the US, and commensurate amounts in other places. And over the course of 6 years, the airlines figured out with new technologies, they could just sell tickets directly to consumers. And consumers trained themselves to think they could buy tickets directly from airlines rather than go through a travel agency. And so you had half of the industry's revenue disappear over 6 years, okay? That was not how IT affected most industries. Most industries did not see half their revenue decline because of it, but for that one particular industry, there was a radical shift. Now, travel agents are still around. They do different things. There's still plenty of, it actually made the travel agencies that survived even larger. I've got work on that. So it's not like it completely destroyed the industry or something, but yeah, you know, any kind of general purpose technology is going to have effects all over, and some of those are going to be larger than others, and some of those are going to be extreme. I'm almost sure of that, but I can't tell you where that's going to be.
Well, I guess I take your point. If you could tell us exactly where it was going to be, then they wouldn't be black swans, I suppose. But absolutely. So let's move in the last section of what we're talking about today to look at the impacts on economies, on policy, on society. Julia, you've said that one of the problems at the moment is that we have an inadequate data. However, policymakers are under pressure to act at the moment from all sides. What do they do about that?
Well, part of the thing that I think is going to be super important is to build high quality data, right? So thinking about where those data sources are going to come from and where you're going to have the trust in the data. So a big push is not just trustworthy AI from the point of, do I trust the AI, but do I understand the impact? And I think, Randy, you cited David Autor's work. We got it badly wrong with NAFTA and the impact of NAFTA on labor markets. And, you know, at least there's some evidence that that's caused a lot of deaths of despair. So I think understanding and building a labor market information system that is local and actionable and timely is going to be critical. And we don't have that statistical infrastructure right now. So part of the thing that I put in the chat was, how do we build that? And how do we respond to it? So part of the work that's being done to inform policymakers, so the other committee I was on was the Advisory Committee for Data for Evidence Building. How do we get that information to governors and to local areas? Because there isn't a national labor market, there's lots of local labor markets. AI is going to be as different in different parts of the country as agriculture is now. So I do think we need to rethink the data system and push towards faster, better data. Otherwise, the policies are going to be really bad. That's what worries me.
Now, what you did reference is your paper, isn't it? Which is the Industry of Ideas Measuring How Artificial Intelligence Changes Labor Markets. Is that correct?
That's right.
Yes.
And we do have, so NSF, as you know, is putting a lot of money into their regional innovation engines. A lot of the new industrial policy is local regional interventions. And so part of what NSF is doing is funding this work that the second thing I put in the chat at the University of Michigan, the Institute for Research on Innovation and Science, which does precisely what that infrastructure could look like.
Randy, I'm delighted you made it back. I have a question for you on these regional effects, because perhaps it will happen that AI will benefit industries, will benefit firms in places that are already doing pretty well, and will be damaging to firms in places that are doing pretty badly. Is there a justification for more place-based policies as a response to AI?
Well, as I said, hopefully you heard the response on Africa, that some countries in Africa may be well suited to be able to take advantage of some of the benefits that could come from AI. So I think the key is that this is a new and rapidly evolving technology. It's going to be very difficult to figure out how to regulate it, and I think attempts to do so are probably going to end up creating more problems for the local economies or the particular countries than helping. So I think we really have to see how it's going to evolve. Certainly, you may want to provide some support in transition for workers. This has come up exactly as Julie had said, in the context of thinking about international competition. And so here is just a different type of competition. So, having some sort of safety net to allow for some sort of support and transition. But I think anything that tries to lock in the past and make new technology adapt to where we have been is not going to be successful, because the new technology will be adopted and will just blow through whatever types of rules you try to put into place. Best to allow it to evolve, and but have a support mechanism there as some of the unintended consequences of it may affect different groups or different areas differently.
Chad, if you were a policymaker in anywhere in Europe, in the Middle East, in Africa, what would you be thinking about with regards to reforming or improving education, considering the impact of AI?
That's a great question. I mean, there's a couple layers to that. One is, what do you do for workers who are already in the workforce to allow flexibility if their job is substantially affected by the new technology? What's the structure that makes it as practicable as possible for them to be able to retrain to something more amenable to the new technology? How do you deal with, we were talking about job security and things like that. I've always been, protect the worker, not the job. Try to keep the jobs flexible, and then help the workers who are hurt when technology changes the nature of jobs. So I think education and retraining is part of that. And then in terms of sort of, education before pre-workforce, of course, I'm kind of a math head. I think everyone should learn more math. Now, maybe people disagree with that, but I can't see how it would hurt to sort of buff up math education, and actually maybe, move a little bit the types of math education more towards, statistics and data analysis, a little bit away from trigonometry. Even as an engineer myself, I think trig came from a history of engineering, but I think what people are more apt to use these days are stats and data analysis. But anyway, that's maybe a little into the weeds. I think the short answer is we'll have to think about education at all ages and just building in flexibility. It's hard. Hey, it's hard to predict the future. We all know that. So you really want to have a system that offers options and can react to the different realizations that might happen as we go forward.
Dad, I think you're as likely to find a maths positive audience here as anywhere. So
good. I
think you're okay on that one. Julia, just a quick follow-up question on that one. Can we learn from the past when we've made these adjustments badly, and the data has shown that we made these adjustments badly?
Well, let me flip the question and say, what have we done well, right?
Yes.
So I've been very interested in the success of American agriculture and investments in American agricultural R&D, which even as a New Zealander, I'm very impressed by what the Americans did. And so why was that so successful? So part of the reason was that farmers, when they came to this country, had many different problems. So Wisconsin apples and Texas longhorn or whatever. And what they did was they built farmers' institutes to learn from each other. And that evolved into the Ag Extension program in the United States. So they had a set of land grant institutions where you had researchers working on problems that the farmers came up with, and then they transferred that information via the Ag Extension system. And that was codified in 1862 by the Morrill Act with the land grants, and then with HBCUs, I think in the 1890s. I think that kind of system where you provide local information about how to respond and how to react for local needs in local labor markets is going to enable or avoid the mistakes of the past. It worked spectacularly well with a very robust ag extension information system. We could do the same for local labor market policy, local extension services, and local industrial policy.
And if I could just really quickly add to that and tie it to what Randy said about we don't want to freeze today's economy going forward. You know, in 1862, when the Morrill Act was passed that established the land grant system, probably about 60% of the workforce were farmers. Now, does anyone think it was a sane policy to try to keep 60% of us farming for the next 160 years? Of course not. But increases in agriculture productivity meant we didn't need hardly as many farmers as we did then. But that was not a bad thing, that we all moved to do something else, that we allowed the economy to shift its shape as productivity growth happened, in part because of the system that Julia was mentioning.
And then just to jump in, but you need data. You said education and training, Department of Labor partnering, like the Employment and Training Administration, partnering with the agencies that are spending the money on the resources and building the data infrastructure so that the training providers, which very often are community colleges or these certificate institutes, that is the way to build flexibility into the economy.
Now, before we finish, I can't let a Chicago webinar about Europe pass without talking about the EU AI Act and whether regulation, how big a role regulation of this style is going to have in the impact of AI on the economy. Randy, do you have an opinion on that?
So as I was saying before, and hopefully we were able to hear that it's, this is something that's rapidly evolving. It's something that's also somewhat difficult to precisely define. And so I think it is important to think about whether there are potential guardrails, think about some of the downsides. But I think we have to be very, very careful in sort of rushing to regulate. This has been one of the challenges that I think the EU has faced in general in innovation. So the big tech firms tend not to be in Europe. There are some that are there, but most of them are in the US, where we haven't had as much sort of rush to regulate in some of these areas. And so I'm not sure it's in Europe's best interest to do that. I think along the lines of what Chad and I were describing, as well as Julia, make sure that there's a safety net that's there for transition, because we don't know exactly what the consequences are going to be. But you want to make sure that workers and people in the economy overall and investors can take advantage of these great new things that are happening. And so make sure that there's a safety net that's there, but I would be wary of jumping very rapidly into regulating an area where we really don't quite understand it yet.
Chad, do you agree?
Very much so. I mean, I study this stuff and I have very diffuse notions of how AI is going to be used in various kinds of settings and the effects it's going to have. And to try to, I think, anticipate all the potential negative effects of that and codify it now is really too early. We need to be paying attention to what effects it has, but I think it's, anything reasonably strict, I think is jumping the gun.
Julia, I'm going to give you the last word.
That's very wise.
You started off so well. So anything that we're saying about AI at the moment is, of course, speculative. So even though you are the data guy, as you say, do you think that we're going to be in a couple of years coming back here and talking about the negative impacts on inequality, on the welfare of the most vulnerable people in society because of AI? That's the fear that dominates the public discourse at the moment.
Well, we just heard from 2 Chicago people. Now you're going to hear from a NYU person, so you're covering the spectrum very nicely there. Of course, you've got to worry about the people who are going to be most vulnerable. I think Gunnar Myrdal said we value an economy by how we treat the least among us. And I think that is a true statement. You have to be sensible, unlike many of the previous policy programs, which have exacerbated problems, not solved them. And I do think that what Chad and Randy have said, which is figure out who's getting negatively affected and use data and evidence to build policies that don't have the unintended consequences that we have had in the past, which have broken up families and had all kinds of bad pieces. Data and evidence, I still believe, will make a difference. So I hope that we're sensible and don't make the mistakes of the past.
A good place to finish, and we are out of time. So thank you very much to all of our panelists. Thank you, Julia and Chad and Randy. Thank you to all of you who asked questions. We did manage to squeeze a decent number of them in, and so I hope you think that we represented the things that you were interested in. I think it was a high quality debate, and it's not going to be the last one we have about this. So panelists, thank you very much. From me, Tim Phillips, we will see you soon, but goodbye for now.